Good afternoon. Welcome to Business 360, your complete view of the stories driving business, markets, and the economy. I'm Apa Ongpin, and this is the Bilyonaryo News Channel. Inflation slows down to 6.8% in May, coming in below the central bank's forecast. HSBC senior ASEAN economist Aris Dacanay joins us from Hong Kong. Exclusive on Bilyonaryo, the United States revokes the visas of former House Speaker Martin Romualdez. And the Energy Department is racing to increase the country's electric vehicle charging points to 3,000 this year. Inflation drops to 6.8% in May, lower than expected, but as Cignal tells us, there are still some price pressures.
The country's headline inflation rate hit 6.8% for May 2026. That's lower than the 7.2% recorded in April. The Philippine Statistics Authority says the slower inflation was mainly driven by softer price increases in transport, food, and housing and utilities compared to April. The final figures are also well below the initial projections of the Bangko Sentral ng Pilipinas. The BSP earlier estimated the May 2026 headline inflation would settle between 7.1% to 7.9%. Some economists also forecasted a 7 to 8% inflation rate. In transport, motorists seemingly began to feel some relief at the pump following a series of rollbacks in fuel prices. Oil prices previously spiked in March after tensions intensified amid the Middle East conflict. Recent discussions of peace talks between U.S. and Iran officials have led to softer prices in the global markets. PSA National Statistician and Undersecretary Claire Dennis Mapa, however, notes that prices of petroleum products are still highly volatile.
Alam naman natin, every week, di ba, talagang nagbabago yung presyo sa mga ang ating pump prices. But the overall, the average for May is lower than April.
But even with the headline inflation rate slowing down, experts warn against the 4.1% core inflation, which was higher than the 3.9% in April.
Economist Jonathan Ravelas says the higher core inflation signifies underlying pressures are starting to stabilize. He adds underlying price pressures refer to the more persistent drivers of inflation, such as wages, rent, tuition, and stronger consumer demand. He says these factors show whether inflation is only temporary, such as when fuel prices move up and down, or if higher prices become more constant, making the burden last longer for households. Meanwhile, even as prices for food items have reportedly eased, MAPA notes that rice inflation remains high. With a 15.6% inflation rate, rice remains one of the biggest weights in consumers' basket, according to the national statistician. Looking ahead, MAPA also warned against the risks of the typhoon season and the arrival of the Super El Nino to the prices of goods and services.
Ang risk moving forward would really be the impact of external factors sa fuel and energy, commodities, and yung ating presyo ng pagkain.
MAPA adds high inflation continues to erode the purchasing power of the peso. He reports that 1 peso today is worth only about 73 centavos compared to its value in 2018. This means that 1,000 pesos today can only buy about 736 pesos worth of goods compared to 2018. For Business 360, Cignal, Bilyonaryo News Channel.
Malacanang has welcomed the lower inflation rate but says it's staying alert to risks like rising oil prices and the impact of El Nino. At this point, let's bring in HSBC senior ASEAN economist Aris Dacanay joining us live from Hong Kong. Aris, hello from Manila.
Happy Friday. Hello, hello.
Yeah. So, Aris, sort of good news. Inflation slowed to 6.8% in May, less than the BSP was worried about. On the surface, that sounds like good news. From where you sit, is it really good news?
Well, so first of all, any drop in prices when inflation is above 4% is a very welcome phenomenon. But we shouldn't be complacent. There are 2 points that I want to raise. One, as mentioned a while ago in the headline, core inflation still increased from 3.9% to 4.1%, breaching the BSP target. What does that mean? That means the spillover effects of the initial energy shock that we saw in April and in May is making its way, creeping its way to more non-volatile items. Inflation expectations may still be anchored. Inflationary pressures are still up. So when core inflation is still high, it still requires some degree of monetary action. Two, the second point I want to point out is that food inflation, although it did ease in the month of May, there is still a risk of a surge in food prices, mainly because the market, or at least the grocery items that we see, haven't really priced in the fact that fertilizer prices have already doubled since the turmoil of the Middle East began.
Okay, so actually, I think you're right. Core inflation is really still rising. A big reason that inflation eased was transport prices, no? Which is it a sign that prices are really cooling, or did lower fuel and transport costs simply pull the headline number down?
So it's simply all transport costs. And I want to point out that food inflation, particularly those that we grow in food that we particularly grow and raise, in the Philippines, food prices have also gone down in line with the reduction in transport prices. Of course, diesel prices have dropped from when I was in the Philippines last week. It was below 80 pesos a liter, which is a good deal because it brings down the cost of transportation, of putting food on our tables, on grocery shelves, etc., etc. But the thing is, rice prices, or particularly rice inflation, is still accelerating. There are two things that we need to observe here. Apart from the acceleration, we also need to observe the fact that global rice prices is actually very low, while rice prices in the Philippines continue to move up. 2 to 3 weeks ago, a kilogram of rice was at 47 pesos per kilogram in Metro Manila. That's actually the highest since 2013. So there's something that is happening. You have core CPI. It goes to show that there is momentum when it comes to inflation, the inner parts of inflation, and at the same time, rice, which is very important for the Filipino household, around a tenth of our budgets. We use 10 of our budgets in spending rice, in buying rice. When rice prices increase, again, the inflation expectations risks being de-anchored.
Yeah, well, locally produced rice, no, is very sensitive to fuel and urea, the fertilizer, which there's also a shortage of because it all comes from that Middle East region, no? So rice Dow rose 15.6%, and corn jumped to 25.5%. Corn is, of course, a major component of animal feed, no? So therefore, meat prices are going to go up. These are the staples for Filipino households. Is there any hope of reversing this direction?
Well, for one, core inflation is already something that the BSP is looking into. It has shifted to what you call a hawkish stance, ready to raise interest rates to curb demand, to at least stem these spillover effects. Now, when it comes to corn and rice, there has been a shift of gears when it comes to rice policy. You had a few months ago, particularly December of 2025, November of 2025, when the administration decided to put a ban on rice imports. During that time, there was an oversupply of rice. But when it was decided that it was going to be extended at around January or February, supply started to tighten, and rice prices went up. There are currently discussions of cutting or reducing the rice tariffs on rice, and allowing more imports to arrive to the economy to at least boost supply. If supply does get boosted, we can expect a huge reduction of rice prices. And I just want to point out, every 10% reduction of rice prices leads to a 1 percentage point reduction in overall inflation. So if we are able to bring rice prices down, it will be an effective tool, not just to bring inflation down, but to bring relief to everyday Filipino consumers.
Yeah, but then the rice farmers, the local rice farmers are going to really suffer because, in other words, they're not going to get, they're going to have to sell their rice below cost.
Now, there are 2 points that we need to consider. One, yes, there are 8 million farmers that will receive more competition abroad. And that is the reason why in 2019, we were able to pass what you call RCEF, the Rice Competitive Enhancement Fund, that every time we import rice, we collect a small portion of that tax that we earmark to the competitiveness of the farmers. It is what you call it's a good compromise in a way that consumers are able to access lower rice prices and at the same time reinvest what we earn to make the livelihood of farmers a lot more efficient and a lot to improve later on. Next point that I want to point out is that there are 120 million consumers in the Philippines. Any reduction in rice prices or in any price in particular will improve the purchasing powers of Filipinos. Just to point out, wages in the Philippines actually grew 7% in 2025. And when rice prices went down in 2025 because rice tariffs were lowered, inflation was just 2%. And that is the reason why in 2025, the purchasing power of Filipinos grew by 5%. So there is this big opportunity to have this compromise in improving the livelihood of farmers and at the same time protect the purchasing power of everyday Filipinos.
Okay, let's talk about the BSP. Let's turn to the BSP. The BSP raised rates in April, and based on this May inflation print, I guess that move is starting to work, no? Or is it still too early to tell? And my second question is, how much fiscal space does the BSP have left? I mean, how high can they raise rates before, growth shrinks to zero?
So I think raising rates for growth to return to zero is something that is off the table. Raising rates too tight at the expense of zero growth will be a very big trade-off. So how much room does the BSP have? We do expect the BSP to raise rates to 6%, mainly because if you have it's the number called the real policy rate. Whenever inflation is high, to tame inflation down, you have to raise the interest rates higher than inflation. Because if inflation is higher than interest rates, you have an incentive to just borrow money, borrow, and credit as a percent of the economy will just gradually increase. That is the reason why you need to raise interest rates. So in 2027, we do expect inflation to be at around 4.4%. The BSP's view is that is around 4.3%. I think a sustainable real policy rate is 1.5%. So that means you need to raise interest rates to as high as 6%. So all the math, we don't think we need to raise rates up until 10%, similar to what we see in other economies of the globe. I think 6% will suffice, and at the same time, it won't be so detrimental to the Philippine economy.
Yeah, well, it looks like the BSP is at least being predictable about this, right? Which is what we want. We want a predictable monetary authority. So if the BSP does move again, let's say there's another rate hike in June, what do you think are the chances? And are we expecting 25 basis points or more?
We take the view that the BSP will raise rates by a jumbo 50 basis points.
Oh, okay.
Even when inflation surprised to the downside today, because one, we need to consider the fact that yes, inflation may have surprised to the downside today, but it surprised to the upside by a lot more the month prior, in the month of April. So on average, inflation is still higher than what anyone initially expected. Second, we need to create buffer. you need to raise interest rates to lend support to the peso. Why is that important when inflation is high? It's mainly because when the peso is weak, the cost of imports increases. So our rice becomes more expensive, our gasoline becomes more expensive. So at a time when inflation is high, it's very important to have a hawkish stance. And I do think 50 basis points is a safer choice, because what if, let's say, we hike by 25 basis points and inflation in the US suddenly increases, requiring the Fed to raise interest rates? That would be a headwind to the peso, can risk weakening the peso a lot more, and of course is a risk to what you call FX-induced inflation. So our take, the safer choice, and I think the economy has room to absorb that cost, is to raise by 50 basis points.
Okay, before the fuel crisis, the inflation target was 2 to 4%, right, annualized. Well, 6.8% is not a bad result for this month, but is 2 to 4% still realistic, within reach this year, or should we really reassess and make a new target?
I think bringing inflation down to 4% as early as 2026 is a tall order.
Yeah.
Even the BSP forecasts predict that inflation will average at around 6.3, 6.5%. Bringing it down to between 2 to 4% will require a lot of sacrifice, particularly raising rates aggressively. So we don't want that to happen. We don't want to take so much growth away just to bring inflation down aggressively. There is a delicate balance that needs to be achieved.
Yeah, our ASEAN neighbors seem to have been doing similar strategies, but also gradually, like the BSP. Some economies even have still 2% inflation despite the fuel crisis. How do you think?
If I may add, I think that's in terms of at least the differences in policy.
Yeah.
So we do have, let's say, Indonesia and Malaysia, who are net exporters of energy. So they did see what you call windfall revenue.
Yeah.
And with their windfall revenue, exporting coal, exporting natural gas, they were able to use that extra revenue to subsidize gasoline and keep prices down. Mm-hmm. In contrast, you have Thailand, where it borrowed 400 billion baht total, which is around 2% of GDP, to be able to keep oil prices at bay. We also had Vietnam, who borrowed money. For the Philippines, our fiscal space isn't as abundant as compared to our ASEAN neighbors.
Yes.
And that is the reason why we had a difficult time, or at least we couldn't afford as big of a subsidy as compared to, let's say, Malaysia and Indonesia. So the policy of the government today is to at least distribute the cost of the energy shock, as much as possible, to government, to households, to businesses, to the private sector, but at the same time provide relief through targeted measures to at least support the most vulnerable in the economy.
So, do we feel overall satisfied with how the BSP has handled inflation so far? And what are you expecting at HSBC for June and for full year inflation?
For full year inflation, we expect 6.6% in 2026 and around 4.4% in 2027. Again, there will be a gradual reduction in inflation in lieu of an aggressive rate hike cycle just to tame inflation down. Again, you have to balance growth and inflation. But in an assessment, I think the BSP has guided markets very well. They were very realistic. They were the very first central bank in Southeast Asia to basically raise inflation forecasts, put down growth forecasts, and shift gears in terms of delivering a hawkish tone to make sure the peso is well supported and does not induce any further inflation.
Okay, well, thank you for your insights, HSBC Senior ASEAN Economist Aris Dacanay. I learned a lot today, and I think our viewers did too.
Thank you, and happy Friday.
Okay, we're taking a break. Up next, a look at the stock market's performance this week. And you're watching Business 360. Local shares ended the week higher after lower than expected inflation in May. The Philippine Stock Exchange Index settled again at the 5,900 level. Most sectors ended in the green. The PSEI moved in an upward trajectory this week. It recovered after last week's slide ahead of the MSCI rebalancing that took place last Monday. The PSEI only declined yesterday as investors expected higher inflation. The Tan Caktiong family's investment firm is buying more Jollibee shares even as the stock stays under pressure. Hyperdynamic Corporation bought 59.3 million pesos worth of Jollibee shares, nudging its stake to 43.47%. The buy came during a rough stretch for Jollibee. The stock is down about 26% this year and hit a low of 126.90 pesos in May. A major renewable energy deal is supercharging ASEAN Corporation's expansion. An ASEAN subsidiary has locked in a 2.9 billion peso financing facility from the Bank of the Philippine Islands, bankrolling a solar and storage project in northern Philippines. Palawig Solar 1 is the borrower, Gigasol 2 the collateral grantor, and BPI Asset Management and Trust is the trustee. The money goes toward building the project and refinancing existing costs. Metro Pacific Water is taking over water operations in San Jose del Monte, Bulacan, for now replacing Villar-led Prime Water. The city government tapped the MPEC unit as interim operator of its water district, starting with a 2-month consultancy deal. During that window, Metro Pacific Water will work to stabilize supply and assess what the system needs, from aging pipelines to pumping stations. The city is aiming to restore reliable water to every household within a year. Foreign investors are pulling less cash out of the Philippines. The Bangko Sentral ng Pilipinas says April outflows slowed to $1.6 billion, down from March. Still, it marks a reversal from last year when money was flowing in. So-called hot money pulled out mainly from bonds and stocks, spooked by inflation and a weaker peso. Wall Street closed mixed with a tech sell-off, keeping stocks subdued. The blue-chip Dow Jones surged to a record close thanks to healthcare and financial stocks, as well as hopes of a U.S.-Iran ceasefire, but the Nasdaq stalled, dragged down by a slump in chip stocks. The culprit, AI chipmaker Broadcom, whose weak revenue forecast spooked investors. The chip sell-off bled into Asia overnight. South Korea's Kospi plunged to its worst in months. Analysts say AI demand hasn't disappeared. Expectations just got a little high. So even good numbers aren't enough anymore.
The markets are definitely saying there's going to be a deal. We're sort of looking past all that. Now, earlier I said this was binary. If for some reason it continues to be a stalemate and we don't have a deal going into maybe later in the summer or the fall, I think there's going to be a reckoning, awakening in the markets, and the markets will quickly try to maybe price in what it means to not have a deal and maybe oil prices to spike up.
The United States and Iran could reportedly hold their next round of talks today. Sources told Reuters the two sides are expecting to reach a preliminary agreement before negotiators work on a final deal. If they can reach a peace agreement, U.S. President Donald Trump said he could meet with Iran's supreme leader.
First, I want to meet with the new Ayatollah, the new supreme leader.
I don't want to meet, but if I did meet, I'd be honored to meet him. I'd like to see if we make a deal. But if we make a deal, it's possible that I would meet him. I'd be okay with it.
But Trump reiterated that the U.S. will not allow Iran to obtain nuclear weapons. He added that Washington had a plan to send troops to remove enriched uranium from Iranian nuclear sites, but ultimately decided against it due to the risks. Still ahead, two Bilyonaryo exclusives. The U.S. cancels the visas of former House Speaker Martin Romualdez, while burglars snuck in one of Manila's richest exclusive villages twice in 2 weeks. Those stories coming up. Welcome back to Business 360. I'm Apa Ongpin. Exclusive to Bilyonaryo, the United States has canceled the visas of former House Speaker Martin Romualdez. That's according to a top government official speaking on the condition of anonymity. He told BNC that the diplomatic and tourist visas of Romualdez were revoked weeks ago. No reason given. The visas were valid until September 2027, but under U.S. rules, they can be revoked anytime over fraud or criminal concerns. Romualdez is currently facing criminal investigation over his alleged involvement in the flood control scandal. He denies the allegations and has not been charged in court. A probe is being sought into how the Cayetano bloc was able to conduct an unsanctioned hearing inside the Senate, bypassing the Blue Ribbon Committee, now led by Erwin Tulfo. Hannah T. reports.
Newly elected Senate Blue Ribbon Committee Chair Erwin Tulfo wants to probe how the Cayetano bloc hearing pushed through. Tulfo said he may summon officials of the Office of the Sergeant-at-Arms, or Senate OSAA, to explain how the group gained access and conducted its proceedings. Before the hearing, Senators Pia Cayetano and Robin Padilla were seen assisting the entry of the 18 ex-Marines inside the Senate premises, making their way to the plenary. No official Blue Ribbon Committee Secretariat was present, but the Cayetano bloc said the proceedings were recorded by their own staff. The hearing pushed through even as the reconstituted Blue Ribbon Committee under Tulfo maintained that it is the legitimate panel authorized to hold investigations. During the proceedings, the 18 self-proclaimed former Marines repeated allegations against several public figures, including human rights advocate and Catholic priest Father Flavi Villanueva.
Isang maleta.
Kanino?
Kay Father Flavi, binuhat ko papunta sa sasakyan niya.
So may isang sobre at isang maleta?
Ay, sir.
Yun ang nare-recall mo?
Ay, sir. Hapon yun, sir, hapon. Tapos yung suot niya, sir, itim na pangpare.
Jolie, a member of the 18 alleged ex-Marines, said he recognized Father Flavi's face, as it was a time that the extrajudicial killings were reported. The priest is a known human rights advocate during the EJ case. He mentioned delivering cash in an envelope at an address he referred to as 33 Clemente on Mindanao Avenue, but the Arnold Jansen Kalinga Foundation and Program Paghilom categorically denied the claims, saying there's no evidence to support the alleged money deliveries, and that the locations described by the witnesses do not match any known society of the Divine Word or SVD Church or Ministry in Quezon City. The groups called the accusations false, malicious, and defamatory, and urged accountability for those who they said use unsupported testimony to damage the reputation of others. On the part of Tulfo, the 18 ex-Marines will be summoned in the next Blue Ribbon probe on Monday, June 8. The senator said they may be held liable if they fail to appear before the committee, as they're also compelled to submit sworn affidavits for their accusations to be discussed in the proper forum. Hannah Tia, Bilyonaryo News Channel.
Okay, we'll be right back after these messages. Welcome back to Business 360. I'm Apa Ongpin. Electric vehicles are having their moment, but there's a catch. Are there enough places to charge them? The government wants to nearly double the country's charging station this year. G. Baroga tells us more.
For many Filipinos interested in electric vehicles, range anxiety remains a concern, and a big part of that comes down to the limited number of charging stations available across the country. The Department of Energy acknowledges that permitting bottlenecks have slowed the rollout of new charging facilities, but officials say they are now working to streamline the process and accelerate deployment. Under the Electric Vehicle Industry Development Act, the country is aiming to have more than 7,000 charging stations nationwide by 2028 and over 20,000 by 2040.
It's about 1,600 charging points at the end of April this year. We're expecting to have additional, maybe double that. That's a target. That's why we're pushing for the streamlining so that we can end the year closer to 3,000.
That push comes as electrified vehicles take up a bigger share of the spotlight at this year's Philippine International Motor Show. More than half of the over 150 vehicles on display feature some form of electrification, from hybrids to fully electric models.
Our message is always choose an HEV. If you're not yet ready to do the plug-in hybrid or battery electric, if you go to the PIMS to this edition, you're going to be able to see a lot of options. This is part of our goal to transition the transportation sector towards more fuel efficient.
Bilyonaryo-backed brands Bike, Cherry, Photon, and Jetour of Romel City, Kia of the Zobel de Ayala family, and Toyota of the Ts are present to showcase their latest models to the public. For Campi Chairman Jose Alvarez, the industry is clearly entering a new phase.
The need for mobility is not changing. It's every year, it's increasing. So models that are new will have a chance to be looked at, and let's see what's happened at the end of this year. Let's see, it will be the transition from ICE to hybrid and full electric is forthcoming.
Campi President Jing Atienza says the auto group has yet to set a new vehicle sales target for the year, after earlier withdrawing its 500,000 unit outlook in May. However, he says events like PIMS show how the industry is evolving, bringing together performance, sustainability, and technological advancement in one show. For BNC Mobility, G. Baroga.
Budget carrier Cebu Pacific is bringing back its piso sale for Independence Day. The promo runs June 5 to 12, covering both domestic and international destinations. One-way base fares start at just 1 peso, for travel between July 1 and October 18. President Marcos has ordered the Energy Department to stabilize power supply across Luzon and the Visayas. The palace says they met with energy officials this week to review supply levels and grid conditions. The Energy Regulatory Commission is also told to review the National Grid Corporation's performance. The push comes after recent power alerts and a full blackout in Palawan. Still, officials say fuel supply is stable with about 46 days of reserves. A national push to get Filipinos eating local pork instead of imports takes center stage at this year's Hog Fest. Pierre Pastor takes us there.
Promote local Pinoy pork is the main goal of the Hog Fest. Inspired by the success of the previous Hog Festivals, the 2026 Hog Fest aims to elevate pork beyond the plate. It highlights sustainability, local livelihood, education, cultural identity, food sovereignty, and food security. This is an initiative to support agriculture and hog raisers, spearheaded by the National Federation of Hog Farmers. At this time when pork importation is rampant and the minimum access volume or MAV continue to challenge the local hog industry, the festival stands as a platform of advocacy. This also reminds Filipinos that every choice to support the local pork industry impacts Filipino farmers, backyard raisers, workers, and rural communities whose livelihood depends on agriculture. 70% of hog raisers in the Philippines do backyard farming, and only 30% come from big farms. This means that there is a loud call to support the local pork industry that has supported the Philippine economy for decades. This event is strongly supported by famous Filipino chefs who campaign for the use of local pork instead of the imported ones. The Hogfest culminating event hosted by the Quezon City government is the Pork Labanan, which will happen on Independence Day, June 12. This will feature culinary experts showcasing their talents in preparing pork dishes. Pierre Pastor, Bilyonaryo News Channel.
Before we go, Forbes just released its list of America's richest self-made women. At the top, not a famous face, but Diane Hendricks, a 79-year-old American businesswoman who built a fortune selling roofing and building materials. Her net worth is now around $21.7 billion. Entertainment stars like Oprah Winfrey, Taylor Swift, Kim Kardashian, Beyonce, and Rihanna also made the list. Forbes says today's biggest self-made fortunes are being built in entertainment, technology, and consumer brands. And that's Business 360. We'll keep tracking the moves that matter across markets, policy, and the economy. I'm Apa Ongpin. Thank you for joining us. Keep it here on BNC, the Bilyonaryo News Channel.